Hello traders, my name is Jamie and welcome to my first ever Forex trade recap video. In this video I'm going to go over a trade that I took last week on Euro-Dollar on Monday the 22nd of February 2021. I'm going to show you my full analysis for this trade and how it played out. As you can see, this trade had a risk to reward ratio of 1 to 3.38. According to my risk management plan, I risked 2% of my account on each trade, so this gave me a total percentage gain of around 6.76% if my maths is correct. So just a bit of background on me as a trader. I have been learning about Forex for the past few months, studying the charts, studying YouTube videos, learning as much as I can, and I've just started trading on my first demo account. I am recording as much data as possible on my trades, trying to evaluate my consistency and profitability with a view to hopefully open my first real account in the next couple of months. I'm currently trying to focus on specific pairs, just a few that I can master, learn their price action, learn their behavior, and avoid confusing myself with trying to trade loads of pairs at the same time. The main pair that I'm focusing on at the moment is Euro-Dollar, mainly because it has really small spreads on many brokers. We're talking 0 pips, if not fractions of a pip, which is really great because I like to use small stop losses to maximize my risk to reward ratio. So with the smaller spread, you don't have to leave as much room in order to account for that within your stop loss. I mainly trade with smart money concepts such as imbalance and institutional candles to help find my trade ideas, and this is working really well for me so far. I'm going to go over all of my confluences for this trade and the higher time frame analysis that I did before taking it as well. So without further ado, let's get into the first trade. But I would also just like to say this is my first YouTube video and I'll be really grateful if you find this video valuable to pop a like, maybe a subscribe, and if you have any questions about anything I've said, any tips, any suggestions, please let me know in the comments below. Let's get into it. So let's start off with the first trade that I took last week on Monday the 22nd of February. I took this trade at around 2:15 in the afternoon, so within the London-New York crossover, so plenty of volume and the potential for some decent moves. This trade had a 9 pip stop and a 30.4 pip take profit, giving us a risk to reward ratio of 3.38. Can't complain at that at all. According to my risk management strategy, I am risking 2% of my account per trade, so this trade brought me a total percentage gain of 6.76%. So what I'm going to do is I'm going to pop this in replay, go back to the higher time frames, and show you sort of what I saw before taking this trade. Let's get rid of that stuff, and we'll start off with the weekly. So I'm going to keep this pretty brief. On the weekly, you can see we've been in an uptrend since the start of 2020 pretty much, creating somewhat of a descending bullish channel here. We do have some highs left from the beginning of 2018, most likely some institutional order blocks up in this level here and around this level here. So we do appear to have mitigated some of them, but I do expect price to come higher over the next few weeks and take the liquidity and fill the order blocks up in this level up here. So going down to the daily chart now, as you can see, still in an uptrend. We have had a little bit of a pullback, little correction here, but we have made a higher low and looks like we're trying to make a higher high. In fact, we did, as that is the 20-second candle. I'll just get rid of that one there. So in general, I was bullish, especially on the short term over the next few days. Going into the 4-hour chart, as you can see, we have sort of been trading in a range, but again, you can see that we are sort of starting to switch direction a little bit, making some higher lows, which is always good to see. This is sort of coming up to the day before, so what I'll do is I'll just bring this up to when I would have entered the trade. 10 o'clock. Brilliant. Yes, this would have brought us up to around 2 o'clock when I decided to enter the trade. So as you can see, again, we did create sort of like a descending bullish channel here, which has been broken out of. We do have highs above here, so we do have some liquidity resting up above here still and left over from here, and also an order block just there. Was tapped into slightly there, but again, we are going to have liquidity left up in this area, so I was still confident that I'm bullish on this pair for, well, definitely for the day that I took the trade. So I was looking for a buy position. I do like to not scalp, but I do day trade, preferably shorter term trades, just as I like to sort of be in and out of the market as quickly as possible. If I could be confident of my directional bias for the day, then I am usually confident that I can find a trade opportunity. So coming down onto the 1 hour, which was where I sort of started properly starting to formulate where I might be able to enter a trade. So this was the 1 o'clock to 2 o'clock candle here. As you can see, it's pretty bullish, closing above these highs here. Now, some key levels that I identified at the time on the 1 hour chart is this order block that we have here. Last up move before we had an engulfing bearish move down here about a week before I took the trade. And sort of an area of imbalance, which had been partly filled here, but there was still room to maneuver to the upside. At this point, I was confident that most likely today we probably would see price come up here, fill this order block, and potentially take the liquidity left above this high here. So coming down onto the 15-minute chart, like I said, I do like to take quite short-term trades. So when deciding on my sort of entry areas and areas of importance, I don't go too low in the time frame, but at the same time, I don't go too high, if that makes sense. So coming down onto the 15-minute chart, what I did at the time was come up to this area here where I've sort of identified where there's going to be institutional order blocks laying. As you can see, we can sort of refine the area of our order block just a little bit there to give us a sort of more refined area. And in terms of imbalance, we have a nice imbalance between these two wicks here. Do have some more imbalance down here, but obviously this has been filled. So coming along to here at this point, we're looking brilliant. So this would have been just before I entered the trade. As you can see, we did wick into this area of imbalance here. That's sort of like a good sign. Obviously, you know, as this is an area of imbalance, we are going to see a reaction from this area. But pullbacks are healthy. As you can see, we sort of pulled back to test the top of this area of liquidity here. So I was confident that we were going to see a small reversal back up again. So coming down onto the 5-minute chart, which was where I was sort of looking for my entry, we can see that we've had this move up and this pullback seemed to be stalling around here. So brilliant. So this was sort of where I was taking my trade. I did make my entry on the 1-minute chart. Some may say that this is too low, but as I said before, I do like to keep really tight stop losses. So I often find that the 1-minute chart is the best for that. So what I'll do is I'll just put it back a little bit before I made my entry. My entry was at 218, so just here. So as you can see, price has come down from this sort of peak up here when we began to fill this imbalance and come down here to sort of test this area that we had here. Now, in terms of a move to the upside, you know, we created so much liquidity under these areas. There's going to be a lot of retail traders that are buying at these areas. So I was confident that before our sort of larger move to the upside, where I'd be looking to take a trade, we would see the liquidity beneath here be taken out. So this last candle here is 13, 14, 15, 16, 17. Brilliant. So we come down into this area now. At this point, I was watching my charts and waiting for a good entry. As you can see, we have now broken through this area of liquidity and we've had a nice wick rejection to the downside. To me, at the time, this seemed like a stop hunt and it seemed like a good final confirmation to get into my trade. So I entered my long position at 1.21380. So just here. So I was ready, pretty much waiting to press the trigger on MetaTrader. In hindsight, I should have waited, as you will see. But I'm still working on my trading psychology and my emotions, and FOMO is sort of a problem for me that I am trying to work on. So as I said before, we set a 9 pip stop loss, which for this left it, yep, sort of fractions of a pip just beneath this stop hunt low here. I was pretty confident of this. And then what I did was, if I just zoom this out a little bit, is I set my target at 30.4 pips, which was just nearly around the top of this institutional range up here. So let's see how this trade played out. So as you can see, we sort of hovered around the area that I entered and we did see a reaction upwards. Was all looking good. Gonna have to move this along and boom, as you see, we do get like a bullish engulfing candle here and price does come into drawdown into the area of my stop loss. Now, this was a scary bit for me. I was watching this trade on TradingView as it was happening, and I saw price come and wick down here. Now, if you zoom in, you can see that it so nearly hit my stop loss. And when I saw this, I was convinced that my trade would have been taken out on MetaTrader. I thought that was way too close. With the spread, it was going to be taken out. But luckily, somehow, I wasn't taken out of the trade. Just about stayed in it. This did scare me a bit, but you see this really long wick, and you see how price sort of didn't close below this area here. To me, that is a stop hunt. Price has come and challenged, taken out liquidity beneath these lows here. So at this point, I was pretty confident that we were only going to see upside from here. So as you can see, we have a massive reaction to that. Price comes up, comes into drawdown a little bit again, a couple times. Price was moving sort of relatively sideways, but we were sort of creating, obviously this is the 1 minute chart, can't do you can't get a whole load of confidence necessarily from the 1 minute chart, but the price action was showing us that price was going up. So we sort of come in and touch this area of imbalance again and do get a reaction off it. Let's see what sort of level that is. Yeah, around the 500 level, so as a strong psychological level, there's going to be orders placed around there. We come up again, break into that area of imbalance. Just sort of moving sideways at this point. I was trying just not to watch it because I'd spent way too long watching it and I just wanted to let the trade play out. So I'll just keep skipping it forward. So again, we do come into drawdown a little bit again, but we failed to make a lower low. So I was still sort of confident about the upside of this trade. Trade was lasting longer than I thought it would be. We're sort of coming into the end of the London session now and into the evening here in the UK. Boom, 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 boom. Brilliant. So we make pretty good progress up through this imbalance, reject off the top a little bit, come through and break it, up into the area of the institutional candle, and finally, this bit was teasing me. I had to step away from my computer at this point and just let it go. So we do sort of stagnate around this area a little bit, boom. And then finally at around 6:45 in the evening, the trade finally did hit take profit. So that's what it sort of looks like more zoomed out. We'll just play on the candles a little bit. So as you can see, we reacted off the top of this institutional candle. I could have had my take profit a little bit higher, but I did want to, make it a bit more likely that it was going to be hit rather than place the take profit right at the top of the institutional candle that we identified. So as you can see, price had a nice big reaction off this level. So overall, I was incredibly pleased with this trade. It was almost like it was meant to be in a way, such a tiny fraction away from our stop loss and then literally just about reaches our take profit. So what I'll do is I'll just show you what this trade sort of looked like on the higher time frame. So on the 5 minute and the 15 minute. So yeah, overall this trade lasted for around 4 hours and 15 minutes, but great day trade. I was really pleased with this, pleased with my analysis. If I could go back and change anything, I would definitely try and work on my FOMO and just being patient, because one thing that I've learned that's really important is you're always going to be scared that you're going to miss the move, but there will always be, most of the time, there will always be an opportunity to enter after you have your original confirmation, So, I would have sort of seen this bounce here and, at that time, if I'd sat down and thought about it properly, I would have known it was likely that price was probably going to come back down, maybe not beneath it as far as it did, but it would have come back down and given us another point that we could have entered the trade at. So yeah, in future, I would encourage myself to be more patient. I probably at the time should have identified that we did have a lot of liquidity laying under here. Some very small order blocks around this area. So in hindsight, I would have played it a bit differently and I would have waited out. But at the end of the day, I'm not going to complain because I didn't get stopped out and my trade did reach take profit for a 1 to 3.38. If you've made it this far, I would just like to say thank you for sticking with me throughout this video. I hope I didn't blabber too much. It was a bit longer than I was planning for it to be, but I really hope that you found it valuable. If you have any questions about anything that I said or anything at all, please drop a comment below. Like I said before, this is my first video and this is a new channel, so if you do like my content and you would like to see more, then please drop me a like and a subscribe. It would be very greatly appreciated. In my next video, I'm going to be going over another trade that I took last week. Much better risk to reward ratio. As you can see, this was a 1 to 7.86. If you would like to see that, please drop a comment below and let me know, and I will go over my full analysis for this trade as well. So thank you for watching, and hopefully I will see you on my next video. Have a great week, everybody, and see you soon.